we need to get a direction right. If you are kind of long term, then definitely you want to get a long term direction right. I think long term is very obvious. So you get a down channel here. So there's a high, there's a lower high throughout. There's a low, lower low, lower low, lower low throughout. So it's very obvious. Long term downtrend. Okay, so no doubt for that. So what about the medium term? So medium term, I would say probably we are still within this big trading range. But also, if we want to take a look at slightly like this swing point of view, slightly bigger swing, this is still a downswing, right? A very like probably medium term downswing. But short term, this swing is probably still up. So say this is still the swing point, swing low, and this is still the upswing. But ultimately, we are still fall under this downswing. So downswing in the medium term and very short term, the upswing is still unfolding, but right now is right at the resistance. Okay, so talking about the resistance, from this chart alone, from a Wyckoff perspective, I will say that we are pretty much at the ice level at the moment. So what exactly is the ice level? So you can imagine that if we look at it this way, okay, by the upsloping type of the channel. So this is what I call the ice, or you can call it a resistance, doesn't matter. So the analogy is like the once the price fall under the ice, like break below, fall under the ice, it's very hard for it to come back up. So because this is just a hole, right? A hole drop below, and then it just attempt to rally up, and then hit the ice again. So coming back down, hit the ice again, coming back down, because there's still ice right here. So unless it can penetrate through the ice, means that it break above the resistance level. Otherwise, this is sort of like the final moment, sign of weakness, inability to rally first time, inability to rally second time. I mean, it can go on for a few more times, but still is a very vulnerable condition. So it's just waiting for the spike of the supply to push it down, and then ultimately, if it could break below the resistance level, or sorry, the support level at about 3,500, 3,600, then I think that's the confirmation for another leg down. So that should really trigger the capitulation, or at least a lot of the panic. All right. So at the moment, what's happening last week? So last week I talked about last week, where is it? Last week was here, right? So that was Tuesday 18. So last week was here. So I talked about that I want to see the price can actually overcome this breakdown bar. So I even show you that the hourly time frame. So in the hourly time frame, I talk about there is a breakdown level, so which is this one. So there's definitely the breakdown level at about 37.60, so somewhere around there. So you can definitely tell that there's a structure like maybe double top breakdown. So this is the breakdown point that first it needs to overcome. And last Tuesday is sort of just at upthrust and then had a reaction. So the reaction is not very threatening, and I don't really see a lot of the downward movement. Although I thought about the situation, one of the bearish scenario that could anticipate is that a downswing start from here. But does it really started here? Well, it sort of started at this point. So there's on Tuesday we got a bit of the rejection, and then subsequently there is a bearish bar, and then there's a follow through just 2 days, and sort of tested the axis line. But that's it. It's just like a pullback, and then this day is a very strong reversal bar, followed by yesterday keep inching up. So at the moment, I would say that this is still upswing. So the trend is still up. I still haven't seen the reversal signal, although at the moment is just right at the resistance level. 3,800 is a very key level that it needs to overcome in order to challenge the next level, which is this one, the Fed bar. So this is where the Fed actually did a rate hike. So this is the next level, a very important level. So, but first, 3,800 is the level that it first needs to overcome. So far, from the volume perspective, I definitely see there's still a lot of the supply. So this bar here, we got a rejection tail. Subsequent to bearish bar, the supply is still relatively high. So these 3 bars here are just supply. So there's still supply, but ultimately it's still able to overcome right here. But if you want to think about the immediate swing, which is from the CPR bar here, is still up, but the most important level you need to overcome is still the 3800, and it could still inch up a bit higher. Even if it breaks out here, I wouldn't be extremely happy, because there's still this level 3900, and this is the breakdown bar, which I emphasized many weeks ago. This is the most important bar that the bull need to at least test it. Otherwise, there's no bullish case. All right. So even if S&P 500 able to test this bar, this is the Fed bar or the breakdown bar. Look at this. Where is it? 39. It's just like midway of the trading range. So from here to the midway of the trading range, it's still a long way to go to overcome this big bearish bar, reversal bar of this bar here. All right, so it's very likely for the market to just have an uptrust situation at 3800 level. So 3800 level is actually one of the key level that I'm actually watching and want to initiate some form of a position, the short position for the futures contract. So because how I want to approach this is to just dive down to the lower time frame. So for example, we can definitely see that this is a trust to the upside, another trust to the upside, trust to the upside, trust to the upside. So right now I see that this sort of kind of resisted at this level 3800. So if we can reverse from here, means that it's probably can break below 3790 in an even lower time frame, like 3 minutes or 5 minutes. Then it could definitely turn out to be a very lucrative position for day trading, and then switch it to swing trading. So it means that either a breakdown from here, or maybe you could just still rally up and then create another uptrust somewhere around 3820. So it means I just tested here and got rejected from this high, from this level, and this is another point that is really good for initiate some short position. So another is just the breakdown level. So ultimately, this is the area to work on, to lean on for initiate some kind of the short position. So Nikki said it looks like no Christmas bull ahead. Well, Christmas is maybe another one month, 1.5 months. Not sure at the moment, but certainly if you look at the seasonality, which I showed you before, for example, the midterm election cycle, from now until probably end of the year, it should be bullish based on the seasonality cycle. But anyway, that's just the study of the seasonality. Ultimately, even if based on the sentiment that's deeply oversold, we can definitely expect some kind of the rally. But how strong is the rally is just up to the bull to prove to us. And also in terms of the market breadth, I just show you, there's already a right condition for it to rally. So here is the rally just started. So I think the bull really need to prove to us that it has the ability to overcome the high right here, and then followed by 3900 level. So either way, I'm sure that we either get a reaction at this level 3800, or likely at a 3900 level. So whether it's forming an uptrust at 3800 or 3900, then I think these are the two levels to watch out for kind of the reversal trade, because right now I think this is still an up wave. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.